This is, to me, absolutely fascinating, dovetailing in this moldy economy with the earnings season. What's Chipotle going to do this year?
It's a good question. I think, last year actually was a pretty good year for the company. On the whole, the company comped 7%, looks like probably 7-8% this year. That's a very healthy same-store sales number. Earnings grew, margins were at their peak. So really, it was a great year for the company fundamentally. What you saw was a lot of volatility in the stock through the year. So we mentioned in the opening, off 30% from the peak, but really only about 10% off for the year, which is not nearly as much.
And you maintain your enthusiasm on Chipotle, unique enthusiasm there.
Yes, I think one of the few or fewer bulls than certainly there were earlier in this year. And I think, like I said, the reality is the fundamentals are still quite strong for this company. What you saw was a lot of shifts in sentiment, investor and market sentiment through the year.
Well, Chipotle is also facing stiff competition from the likes of Yum Brands and others, especially in expansion outside of the U.S.
Well, I think with respect to inside the U.S., there's been a lot of talk about Yum Brands and the Cantina Bell. If you look at the two products, they're really not comparable. Not only is the quality arguably a lot higher at Chipotle, there's just a lot more food. So we did a nutritional comparison. There's literally twice as much protein in a Chipotle burrito bowl as there is in a Cantina Bell. So that explains a big part of the price difference.
Do you send Sanford Bernstein interns out to do that?
No, I love Chipotle. I do that myself.
Very scientific.
Very scientific. I can just see it. You five, go over to Chipotle and eat.
But that actually brings up a question of food price inflation and what a company like Chipotle will do to keep margins sustainable.
Yeah, I think food price inflation is going to be a headwind for the industry overall. I think what we'll see is actually the first half of the year will be pretty calm, and then the back half of the year we're going to start to see it tick up a little bit. But if anybody has the ability to take prices up, I think Chipotle is that company.
I'm curious who their real competition is, because they seem to be a tweener. They're not quite an Applebee's where you have a more formal dining experience, but they're not a real fast food restaurant either.
Right. No, that's exactly right. They're part of this new category, the fast casual. When people think about what that means, they think, it's still limited service. You still pay first, eat second, but the quality is higher than your traditional QSR, and it's more made to order. So when you think about public companies, you might think about Panera, for example, as a
but
competitor.
not McDonald's.
But probably not McDonald's.
And you mentioned the volatility in this stock. Perhaps one reason is it's been such a fast growth trend. We have some numbers here to highlight in terms of the metrics of how fast it's grown. And you can see from 2006 to 2011, we're talking about $800 million in revenue. Now we're at $3.1 billion in revenues, 105 stores to now up to 180 stores. Is that why we've seen such wild swings, such a momentum stock?
Right. So to your point, yes. And when you have very fast growth, small changes in investor perceptions about what that growth rate's going to be can lead to big changes in the stock.
Sarah, one of our big headlines last week was David Kelly at JP Morgan Funds talking about 0% growth first quarter, 0% growth second quarter. Is weak economic growth McDonald's and Chipotle's friend?
Well, slow economic growth may be, because you see some trade down. Really weak economic growth is nobody's friend.
Yeah. I mean, that's a nuance. Is it your single best buy right now?
Right now, there's absolutely the most upside to my target price for Chipotle.